Hi everybody, this is Gary Demas, Sentiment Timing, and this is our technical video report for Thursday, October 10th, 2024. We actually had a pretty decent day today, even though there was a lot of movement up and down, and we really didn't close that much down. But we got in really good positions, and at the end of the day got stopped out, but I'll show you those trades, so we took some profits. But we're in a new cycle to the downside, so even if they have to come back up and make new highs, it's not going to hold until this new cycle on the downside evaporates, and it's very early on. It just triggered today. So if it goes up, you want to be shorting anywhere, say from if it gets up to the 50, or say the 5800, 5810. I don't know if it is. I don't know if they're going to be able to get above it, but we'll find out tomorrow. But the thing is that once it takes out this support, that's when that should be a quick move down to the 5750. And you can see the 5743 moving average is probably going to be at the same spot where this is. So this will probably get a bounce here. And if that happens, what we'll do is we want to make sure that this is used as resistance. If it is, then this is going to be taken out, and we're heading back down to these levels here. Now, I'm kind of on the side that we're in this range, but if we do come down to these levels here and then bounce back up, what I'm going to, again, this is really, really early in, so I don't even know if this will form, but if you take a look, that could be a left shoulder, this could be the head, and then we come back up and make the right shoulder. So, we seeing some type of a move down to the 5700, bouncing and then coming up. What it's going to do is set up a much, much larger drop, because from the neckline here, 5676 up to 5800. So let's just say it's 125 points. It will be 125 points from the break of the neckline. So if we get, if this forms and it plays out, as the pattern would look for, basically we just start from here, say to 5700, and now we take off 125 points, which would bring us probably pretty close down in between the call wall and another gamma line. So these would be the targets, and like I said, we're with the other software I use, we're on a very early sell signal, and it's one of the things where the market will not stay up with this when the sell signal is in place. So it's gonna, I'm using it to short, and today I sent out an email, and I put it into our chat room to look to short. I was using the spiders on this, and I said, short anywhere from the 576.50 up to 577. So if you look, we actually went a little bit above it. We got up to the 57.72. So it was definitely underwater a little bit, but then from there, that's where we saw the selling come in, and the original target was 575. So we were able to lock that in. And then this swing trade that I put out, it was right around here as well. And when we are at this at the 75, I said, take half of it off and put your stop at entry. And so we locked in some profits, and I ended up getting stopped out of mine. I don't know what price anyone else got in, but the stops are set on it. So I'm moving into tomorrow cash, but I'm still thinking you want to be looking to the downside on it. Now, if we do pop up, I've been showing this pattern in where we're kind of like forming this little bearish wedge. Actually, it's not on that one. I don't know what, I think I have to go on a 15-minute chart. We could just go from here though and draw. But in any case, it's drawn. It has these where we're not really skyrocketing up. We're just going down, and we're just trading within this wedge. So when this breaks, if it comes back up again, we could see a move up to this this 578.90 or 579. They would probably do it in a gap motion and then come down, because like I said, this is not the cycle that we're in is it's going to be very hard for the bulls to move higher. Now, this may have been it, and we open up down tomorrow and break through this wedge, and then from there, that's where we start looking at the next move to come down to the 572, and then eventually make it down to the 570 in that range there. So we don't really have any bearish divergences because we didn't make a new high. I thought we did make a new high, but we didn't take out these. We missed it by a little bit. So maybe they need to do that to form the bearish divergence like I've been talking about, where, typically that's what we see is a decent bearish divergence before we get any breakdown like the one we had here. And this would be, we'd have to make another one right here. So this is, the trade worked out good. It was a little bit of stress for not long, only a couple minutes, and then we came down to target and locked in some profits. So let's get back to the actually, you know what? Yeah, no, that's right. I want to stay with the S&P here. So really, this is the line that the bears need to get through. They need to break through this 57.66 level. If they do that, then again, like I said, we're coming down to this 57.43, maybe a little bit lower than that. And if it breaks through that, that's when I would anticipate we're coming down. We're going to do a full a retracement, come down to the 5,700, come back up, and then this call wall is going to hold it down. And then from there, that would be the ideal pattern. Again, this is very early in. They're just kind of making the head right now. So it's I don't know if it's going to play out, but if it does, it kind of fits the whole pattern that I'm watching. So 15 minutes, we had the bearish divergences, so I was anticipating a move down. We got it. We never really got into the completely oversold levels here. So it's one of those things where they keep turning the market. And again, like the information that we got today from like the CPI report, I was kind of scratching my head on why anybody was buying dips. But this is what happens when we make these, either intermediate term tops or short term tops, is everybody gets extremely bullish on the market. They buy every dip, and then they're the ones that are panic selling at the end. So I'm on the side that we're, even if we do head higher, there's a lot more room on the downside than there is the upside. It may take a few tries, but I really believe that the elections are going to be a heavy weight on the bulls' backs here, and I don't think they're really going to be able to scream it that much higher. So let's see what plays out tomorrow. I'm sorry, I wanted to show you one other thing. Bear with me. Okay, so this is what I was saying. The fund, the trades that I made for the day, 56.25. I have this open here, that the NUE short, if you guys want to jump on it. I'm using the October 8th, and it's just the pattern looks like it's going to go down. I'm going to put a stop if it goes back above the 155 level. So it has some time. I think it's going to go down, but you can see right here for the day, we had a fantastic day, and it was really picking the tops and stuff like that. And plus, I took that the straddle. Bear with me. Okay, so this was the condor that I put on yesterday, and really the trade was I was just putting odds in my favor with this, saying that I didn't think that even with the CPI numbers that the S&P was going to be able to get above the 58.55. So I sold the 55, sold the 58, I bought the 58.65, and then I used 57.10 and 5700. Now, I was able to get out of these. They expired. They're filled at zero, so I didn't have to do anything with them. They expired, so we got to keep all the premium. And on this one, we did get stopped, and it's kind of, I made a mistake on it because it was. I should have. I went to go put in a stop limit, and I left the 25 as the limit to trigger the stop. So, and I wanted to have it at 70 because that was our entry. So we got filled at 25. So we still did really, really well with this, as you can see. And that was really, those were the trades. And but what I was saying, where we put out the alert today, and this was, so this is where I said that, we have a NIAID sell signal. And I'm building a short position right around between here and 577, using the 1016 expirations, and the downside target's 570. Less aggressive traders can sell the 580 calls, and the 585 using the same expiration. So these are up a ton right now. And the ones that the 577, I got, like I said, we took half the profits and then got stopped out of I got stopped out at the second. But I have a feeling we're going to come back up and retest this level, which we tried today. So coming back up to these levels, if we're going to do this, I'd rather be cash and just average in up, get more short up here. If we break down, then I'm just going to wait for resistance to hit and then take another short trade. So with that, have a great night, and I'll talk to you guys in a